Hello, everyone, and welcome back to another episode with me, Kavita Agrawal, the founder of EXP Invest. So, today, since it was Friday, we will be talking about Nifty, the sectoral indices, and the stock of the day. So, for the stock of the day, I have chosen Supreme India, and we will see what is developing on the charts and how that dictates our actions at the end. So, stick through. Now, without any delay, let's get started with the chart of Nifty first. So you are seeing the chart of Nifty on my screen. Perfect. Let's open this object tree. Okay. Now, what is going on the chart of Nifty? Let's see. Let's make this full screen. This is the weekly time frame. So we are experiencing a bounce back, and we have established a higher high on the weekly time frame on the price chart. The weekly time frame bounced back from the level of 40, indicating that the bull trend that was ongoing continues to remain intact. On the daily time frame, very interesting phenomena. Just to refresh what we covered already last week, there was a positive divergence. This positive divergence led to a rally which established higher high above the level of 23,900. Now, we see few dojis started to get formed close to the level of 24,378, but the level of which was a little bit bearish, and today we saw a major correction in the market. And now we are seeing that on the daily time frame this high has established a level above the level of 60, which is very good. So what we will do is we will take this line and we will move it backwards. Why? We will move it backwards because let me just delete it. I want to move it backward because when the level of 60 gets breached, the bear range starts to get broken. So on the daily time frame, the bear range started here on 12th of November 24 when the level of 40 was breached and sustained. Here the level of 60 has been breached. So I think it has started to go positive on the daily time frame. But whether or not this is true will be determined in the next few days. Let's take a look at the 75-minute time frame. Now, what we are seeing on the 75-minute time frame is extreme activity, in the sense that the 75-minute time frame is continuously breaching below the level of 30 and subsequently also above the level of 70, right? So this typically happens when the higher time frame is undergoing a major momentum shift. So because the momentum was bearish earlier, I am of the opinion that momentum is now turning advance. The momentum is now turning positive. That is why we are seeing this extreme activity repeatedly on the 75-minute time frame. Nonetheless, this entire rally that has unfolded so far, right? If this goes into correction, then a potential level where we might see this correction end might be the 62% retracement level. If this correction does not ensue right now, then the next resistance is at the level of 24,800. So for me personally, I booked a lot of profits on the 22nd and the 23rd of April. I had invested 50% of my portfolio. So I booked profits in 50. I had 50% of my portfolio in sitting in cash, which means 50% was invested in stocks. I booked profits in 75% of those positions that I had active, right? So now I have what I have done now today, because there was a major correction. During the last few days, I assessed the market. I saw where there were potential entry levels on stocks which had strong underlying momentums. And there I set a buy entry. So today I got some of the executions. So I bought 4 new stocks today. Okay. So Nifty right now is between, maybe it can rally to the next resistance or it can correct. It's not giving very clear signals immediately. Okay. So we will leave that there and we will now move towards our indices watch list. Okay. So last week when we had the discussion, we concluded that these were the sectors that were looking pretty bullish. Now we see that the finance sector after April 18th. So April 18th, this looked very bullish, but this entire week it has given a correction and come back to a very attractive entry opportunity. So in this sector itself, there are some stocks which I have my eyes on, which I'm waiting to correct a little bit so I can make positions in. From a broad perspective, I would say the underlying trend of the finance sector continues to remain pretty bullish, but I would say it's a little bit closer to resistance than to support. So while it is bullish, I would say it is more of an exhausted trend. So for fresh position, I would, even if I get the execution, I will be looking for small targets, not large targets here. Next, Bank Nifty. So Bank Nifty again has already given a massive correction, massive rally. So we want to see some correction before we enter. So ideally, I would want to see the correction to 51,000 or 52,000. I was going to say 51,800, but let's round it up to 52,000. So when I get a correction around to the level of 52,000 in Bank Nifty is when I will start looking for opportunities in the private banking sector, not now. Next, let's look at the media sector. The media sector has established a new higher high, and it is giving us positive signals. So look out for confirmation on stocks within this sector at itself for pretty good upside movements. FMCG stocks. So FMCG is also recently moved into a good range, but it is yet to establish a higher high. However, I do feel pretty confident in some of the FMCG stocks because they are available close to important trendline supports, and they are also seemingly bouncing back. Um, they seemingly also uh, they have seemingly also created good double bottoms on the charts, and they're bouncing back strongly with good volumes, so you want to keep an eye there. PSU banks. Now, the PSU bank did give a positive divergence on the daily time frame, and then it has come up to the level of 60, but it is taking resistance there. 75-minute time frame, however, has turned very positive for PSU banks. So right now, if I want to dabble in banks, then I would rather dabble in the PSU sector rather than the private sector, because I think the private sector has gone up pretty strongly. And I also told in my channel that if you are interested in private sector banks, then you should be very careful, because on the chart of ICICI Bank, I'm seeing some signals which are not giving me a lot of reassurance. So just make sure that you're exercising enough caution there. Next is the consumption sector. So in the consumption sector, what I am seeing is that there was this and then here, but I wouldn't call this a higher high, would I? Sorry. Yeah, so this is the daily chart. It was the 75-minute time frame, correct. So this was not a higher high yet. It needs to establish a higher high. However, the RSI on the daily chart seems to be going into positive range. So this was the negative range up to this point, and now it seems to have started to go up to the positive range. So I think a correction down to the 250 EMA would be a good idea for consumption. So what I'm going to do is I'm going to remove CNX Finance from this category because I'm not going to actively look for positions in these sectors. Private bank also I'm going to remove. Media looks okay. FMCG looks strong. PSU looks strong. Consumption looks strong. Next, infra. Now, infra, very interestingly, what I am seeing is that, let's delete this line and let's draw this bearish range border all the way here. Okay. Now, after all this bearish activity, I'm seeing slight translation into a sort of a bullish positive range for the infra stock. Also, a higher high has been established. So I am looking for opportunities in the infra space now, actively. So I'm going to move that up. Let's go into reality. What am I seeing? So I did buy one of the realty stocks. There's a massive RSI positive divergence on the realty sector. The higher high has been established on the chart, and I personally feel that this space is very attractive, especially for the Indian markets, right? So I am going to keep an eye on the realty sector for the next month to trade in. Oil and gas. So today's talk is from the uh, oil and energy, so oil and gas sector, and I will tell you why I'm discussing it. Now there is a positive divergence on the daily time frame, but as you can see here, we have not yet gone overbought on the daily chart, right? We have established a higher high, the price. So we noted this last week that we need to see a higher high above 10,600. So that has happened. The 250 EMA has been crossed, but it has not been sustained. So this thick blue line is the 250 EMA, has been crossed, but has not been sustained, right? Um, so we do still need to see overbought conditions happen here. If and when that happens, I think oil and gas can become pretty attractive, because 75-minute time frame, what I'm seeing here is it was positive up to this point. Here it started to go negative, 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 and here it went like super overbought and is still super overbought, right? So I think it is definitely trying to shift momentum. Um, so I'm definitely interested in the oil and gas sector. So we'll move it from potential to bullish. Energy sector, again, positive divergence, higher high established. 75-minute also overbought. So very similar activity, but it's starting to look more bullish than it was earlier. What about the metal sector? Has anything improved this week? So I don't see much improvement here. I continue to see lots of bearish activity in the form of breach below the level of 40, resistance at the level of 60 on RSI, lower high, lower low formation. So I am going to continue to remain pretty cautious in the metal sector investments. Uh, Finance we've discussed, Nifty we've discussed, pharma. So I am seeing very good developments on some pharma stocks. One of the stocks that I covered in the 100-day stock series was also from this sector. So I am keeping an eye out. I would say here there is a positive divergence, and we can see support came in at the level of 40, but we still want to ideally see overbought conditions. The pharma sector has established a higher high above the previous high level, and the 75-minute time frame is definitely going way more overbought now, indicating underlying momentum is turning bullish, at least in the short term, right? So pharma sector has potential. So I have my eyes on the pharma sector. So I'm going to move this to potential. Next, let's take a look at IT. IT continues to look very negative, so we'll move on. Commodities not looking attractive. We will move on. PSE, I think it's was showing promise, but it's starting to disappoint. If you remember, I discussed the stock of NASDAQ. So I had discussed the stock of NASDAQ in the 100-day stock analysis series, and I mentioned clearly that to convince us that NASDAQ is turning super positive, we want to see a lifetime high and all-time high. But as Nasdaq continues to climb up towards lifetime high, the momentum strength is clearly breaking down. So I think that's a common theme across the PSC sector stocks. So you need to be very careful. 75-minute time frame is also showing a negative divergence. So more correction is expected. Fresh entries are not recommended, at least not right now. Auto sector, nothing very interesting. I want it to go overbought before I do anything. Healthcare. What about healthcare? Healthcare 250 EMA is acting as strong support, and 75-minute time frame is definitely trying to buoy itself up. So I think I'm going to move. Huh. There you go. I was very confused. So there it is. Pharma also, healthcare also. I'll move with pharma under potential, right? And that's it. That was all the sectoral indices that we wanted to discuss. Let's also take a final look or quick look at the intersector chart from last Friday onwards, right? Last Friday was holiday. Let's look at it from Thursday. So we can see the IT sector has done relatively good, but I would suggest you don't jump into IT sector from trading perspective because the charts are not looking very trustworthy to me. Auto sector also did relatively well, but like I said, wait for further confirmations before you start putting your hard-earned money and post-tax income in there. Look out for pharma, look out for healthcare. Still, wait for metal sector to stabilize. Realty is giving potential for upside. I think Bank Nifty is getting exhausted. Private banking sector is getting exhausted. PSU bank sector has more potential. Finance is getting exhausted. Consumption, FMCG have potential. So this is a quick shortcut, quick recap for you. Now let's move to the stock of the day, which is Supreme India. Okay, so what we'll do is we'll clear existing drawings and then we will start with analysis of the weekly time frame and then take it from there. So this is the weekly chart, and if I zoom out, right, what do you see? You see a massive bull run, which tells us that this stock is a perpetual bullish stock that is currently undergoing or experiencing some intermittent correction. So I am interested in this uptrend, so I'm going to try to draw the trend line here, but it doesn't encapsulate the recent price activity. So, what about this? I think the bottoms are not yet forged, the tops are definitely forged. So, I'm going to use them to create my trend line trajectory. And okay, so this channel is what is getting forged. So, this is also where we place the trend line initially. Now, I want to also capture this bottom price, right, to capture all the price action in history, and then I want to take this and I want to place this at the top. So you can see how beautifully this stock moves within this channel, and this channel is being respected since, say, this first point, which is 2003, first time it took resistance, right? So since 2003 it has been moving within this channel, and you can see that the most depth that it has taken. Right now the stock is exactly there and starting to bounce back. So there is very good potential building up, and fundamentally also the stock is very strong. Okay, so, what is weekly time frame telling us? That the momentum was extremely strong on the upside, but momentum peaked out back in August 23rd versus price which peaked out on 18th June. But remember, price, even though it peaked out later with lower momentum, the momentum was still pretty high, such that the momentum was around the level of 67, which is still strong. Okay, so a negative divergence when it occurs with the RSI still above the level of 60, not below 60, but above 60 on the right end, it typically means that there's going to be an intermittent correction within the bull trend, not a reversal. Okay, so that is basically what happened. But an intermittent correction on the weekly time frame is going to be a full blown correction on the daily time frame. So let's move down one time frame to the daily chart and see what is going on. So on the daily time frame there was a very beautiful positive range which continued from September 22 all the way to this point, 18th October 24, until the level of 40 was breached. So there, this bear range got established. Now, what is happening? Now, RSI has bottomed out on 27th of Jan 25th, but price bottomed out on 7th of April 25th, which means there is a positive divergence. Now, this positive divergence, right? This positive divergence is on the daily time frame occurring within a bear trend. So what is a intermittent correction on the weekly time frame is a full blown bearish trend on the weekly time frame. Okay, so on the weekly chart, we are seeing lower high, lower low formations, but RSI has created positive divergence. So, what do we need? We need a legitimate higher high. Above which level? How do you choose which height should we be concerned with? So, this here is I would say, an important support resistance zone, right? So this is one level, and another, if you are conservative, then in that case this level is a better zone. So what I can do is I can extend it backward and I can see there is a gap right here, which actually makes this level very important, or I can also stretch this up a little bit. So once the stock sustains above 4,000 rupees, I would say it's done a pretty good job of reversing from the bottom. Also, don't forget that there is this trend line here which can still pose as resistance. Also, there is a 250 EMA which can also pose as resistance. So when a stock is coming out of the deepest uh, trajectory in its channel, it can experience a false breakout or continue correction again. So you need the confirmation that the stock breaches above this set of resistances. So what I want to do is I want to set an alert on the 250 EMA such that when the price crosses the 250 EMA, then I get the alert that Supreme India is crossing EMA 250, and I want to know that there was RSI PD on daily. Weekly is still bullish. Has stock recovered from lowest trajectory of channel? Question mark. Has higher high been established? So I am already making a note of all the things that I care about so that when the alert gets triggered, I know what I need to look out for. I'm also going to paste this note on my chart. Okay. So what we've done is we've identified opportunity and we've set up the alert. We will keep coming back to this stock repeatedly. So I am going to go ahead and I'm going to add this stock to my bullish list where either there is a confirmed. Oh, I'm so sorry. I closed that tab. Can I reopen close tab? Don't think so. It's okay. We'll just open the chart and then we will open the watch list. Yeah, so this I have a watch list where I have added all the stocks where I've confirmed there is an underlying bull trend, and I have a different section here, and these are the stocks where I think a potential bull trend is brewing. So I have uh, the right alerts set on each of these. Why I'm doing this is because I have identified a bull run. Now I am monitoring these stocks, and when I get the right opportunity, the right Fibonacci retracement level, the right trendline support, the right support resistance, the right pullback to the previous high, that is where I'm going to create my position. Okay, so this is all that I had to discuss for today. Now I can see some comments. There's Vaibhav. He's asking that he's bought Nifty puts. What do I think? I think that you should not trade in options, and you should definitely not trade in options on the basis of free advice off of YouTube. It is absolutely a bad idea to be trading with so much leverage in a landscape as risky as the stock market. So stop giving into cheap uh, uh, temptations, right? Stick with disciplined trading and stick with the market. This is a long answer or a long way of saying that I don't trade options and I don't know what to tell you, right? So Aditya is asking, is it good for long-term perspective, the media sector? Aditya, media sector can be good for long-term perspective, but you have to wait for some confirmations. And remember, it is a very risky sector. So make sure that you don't invest a very big chunk of your capital there. Alex is asking for recommendations on the book, recommendation for books for technical analysis and advanced. Um, do I have my book here? So, one very advanced book that I am personally reading right now is The Master of Swing Trading. It's by Alan Farley, and it's a pretty difficult book, but I think it has a lot of very good insights. So, that is what I am working with right now. Um, so I can see there are some requests for stock analysis. I will assess your stock requests like SJFC Bank and the Titagar railway systems. And if I see good potential in them, I will come back and I will discuss those stocks in the next live session. Um, Let me quickly check if there are any more comments that we need to attend to before we wrap up. If you have any questions with respect to the session, with respect to technical analysis, I'm very happy to answer. But with respect to stocks, you can drop the names. I will assess the stocks. If I see good opportunities, then I will make it part of my 100-day stock analysis series. Okay, let's see. We'll just switch. Cool. So, this is all for today. Thank you so much for tuning into the session. Before you leave, I want to make an announcement. Since it's going to be, since Mother's Day is coming up, I am announcing a 50% discount on my advanced swing trade training program because I think mothers really deserve a chance to reclaim their power, and the stock market has the potential to give mothers the uh, flexibility, the opportunity, and the chance to reclaim the financial freedom. So, if you have a woman in your life who's a mother who is making so much sacrifice, who is glorified but not compensated enough for all the hard work that she's doing, and who knows the basics of the stock market, then tell her about this and introduce her to the world of swing trading. Be her beacon, and I will be very honored to teach a batch of mothers who are passionate to get back their financial power in the next batch. So the next batch is going to start after Independence Day, that is 15th August. Um, and this offer, you can claim the 50% discount by using the code Mother's Day on my website, expinvest.in/learn. So that's all for today. Thank you so much for joining in. I will see you again very soon on Monday, same time, 5:30 p.m. So thank you so much for joining in.